Recording? All right. Good afternoon. This is a Committee on Administration for Dunn County. We're meeting here in room 54 of the County Administration Building. Our first order of business is the call of the roll. And if Chris would call the roll for the supervisors, if you would, please.
All right, Supervisor Bauer.
Here.
Supervisor Bashan.
Here.
Supervisor Headland.
Here.
Supervisor Vogel. And we are waiting on Supervisor Story.
Okay, all present is Sheila, and we will proceed. We do have a quorum. Approval of the minutes. Our last meeting took place July 25th, 2024 in this room. Anyone care to make a motion? Thank you. All right, Supervisor Bashan and Supervisor Bauer, first and second. All in favor? Aye. Any opposed? Thank you all. All right, public comment. Are we have any public comment? You do not?
I don't believe so.
Does our clerk have any? Thank you. All right, we're going to move on. And at this point, we're down to item 5, and that is our audit report from the year 2023. And that's going to be presented to us by Kerber Rose. And so I'm going to kind of turn this over to be back and forth with Chris, if that's all right.
Yes.
All right. Go ahead. Thank you.
All right, so I would introduce to you David Minch, who is an auditor with Kerber Rose and has been our lead principal person on our audit. And he is going to walk you through the 2023 audit report.
All right. Well, thank you, Chris. Would you like me to share my screen for this presentation?
Sure, that'd be great.
Okay, excellent. All right. Well, as Chris mentioned, my name is David Minch. I am one of the government audit shareholders at Kerber Rose. And today we're going to go through the annual financial report and also the management letter for the year ended December 31st, 2023. I will refer, if you're following along electronically or have the book in front of you, I'll refer to both printed page numbers and PDF page numbers. The first page we're going to look at is printed page number 1 or PDF page number 4. This is the...
Oh, excuse me, David, just for a second. They only got them as a digital copy, so they don't have the books in front of them. So if you can make yours larger and go slower, that would be great.
Okay, yep, will do. Okay, the first page that we're going to look at is the independent auditor's report. Essentially, this is why any municipality has an audit done, and that is to receive an opinion on your financial statements. Our opinion is listed in the second paragraph on page 1 here. It states that in our opinion, the financial statements referred to above present fairly in all material respects the respective financial position of the governmental activities, the business type activities, each major fund, and the aggregate remaining fund information of Dunn County as of December 31st, 2023. So in other words, this is a clean or unmodified opinion. It's the highest level of assurance that we can provide as auditors on a set of financial statements. The next page that we'll look at is the balance sheet for the governmental funds. This has.
Chance you can make it larger for us.
Maybe.
It's about as good as it gets.
Yeah, without so you can actually kind of reference. I can. Is this okay? I mean, I can move.
Yeah, that works. Mm-hmm.
Okay. So this balance sheet includes all of the major governmental funds and the non-major funds in the aggregate. And that's set forth and determined by government accounting standards. On here, we have all of the assets, liabilities, deferred inflows of resources, and also fund balance. Just a couple things I wanted to point out here. The general fund does have a significant advance to other funds. The largest and most significant portion of that is to the neighbors of Dunn County to cover some of that or to cover all of that deficit in cash from the previous 2 years operating results. So just one thing for the county to consider going forward if they want to make that a permanent transfer, or figure out a way for the nursing home to essentially pay back some of that money in the future. Next thing that I want to look at on this page is the fund balance. The fund balance for any fund are the accumulated resources of that fund for future needs. The general fund ended the year with approximately $22 million in fund balance. Fund balance is categorized in non-spendable form, restricted, committed, assigned, and unassigned. The largest portion of this is the unassigned fund balance within the general fund, and the unassigned fund balance, this is the resources available for operations and cash flow of the county. The general fund specifically, the general fund is your main operating fund of the organization. And one thing we like to do is benchmark the unassigned fund balance compared to overall expenditures within that fund. So the total expenditures within the general fund during 2023 was $25.8 million this year. If we take that 16.7 million divided by the 25.8, that gets us approximately 64.7%, which is a very strong and a very healthy unassigned fund balance for the county. So very positive aspect for that in regards to the general fund. The last item on this page that I just wanted to talk about was the total fund balance for all of the governmental funds. And at the end of the year, that was $24.5 million this year. I'll make this bigger here. This next page is the statements of revenues, expenses, and changes in fund balance for the governmental funds. So in other words, this is your income statement. And just a couple things that I wanted to point out here. Within the general fund, I already talked about the total fund balance of just over $22 million, but that was an increase of approximately $2.7 million over the past year. So again, a very positive aspect to the general fund. And then overall as a whole for all of the governmental funds, the fund balance increased almost $3.1 million this year. Moving ahead here, this page is a little small, so I'll make it as big as I can and still work through it. This is the statement of net position for your proprietary funds. So this includes things such as the neighbors of Dunn County, the Highway Department, and also the Transit Commission. On this page, the one thing that I did want to note is within the neighbors of Dunn County, we do have about a $2.8 million advance that's essentially still owed back to the general fund, unless the county makes the notion to make that a permanent transfer going forward. But overall, I mean, the one thing that we really like to point out here within these funds is the overall net position. And so the neighbors ended the year with about 12.3 million in net position. Highway ended the year with 5.1 million, and Transit ended with approximately 1.5 million in net position. Moving on to the statement of revenues and expenses and changes in fund balance. Again, so this is essentially your income statement. The couple things that I'd like to point out here is really what your operating income is for those funds. And all of these funds did experience an operating loss for the current year. There was a number of factors that dictated that, some of it being the fact that property taxes and intergovernmental grants, both for, essentially for all three funds, is considered non-operating income by standard. So the most important thing is looking at that change in net position, which I have highlighted here. This was the overall increase or decrease from year to year. And the neighbors of Dunn County had a decrease in net position of approximately $1.5 million. Highway had a decrease of approximately 371,000, and transit had a decrease of 132,000. Does anybody have any questions on the basic financial statements before we look at some other information? All right, hearing none, I will, oh, sorry. All right, so hearing none, we'll move on. One thing that I always like to point out to all entities that I work with is, what is your overall outstanding debt at the end of the year? And then what is your legal margin for new debt? And so municipalities in the state of Wisconsin are authorized by state statute to issue up to 5% of your equalized valuation. And so the county currently has approximately $28 million of outstanding general obligation debt, which equates to the allowable new debt limit being approximately $226 million. So the county is well below their authorized debt limit, which again, from my standpoint, is a very positive aspect for the county to be able to fund its operations with such a low outstanding debt balance, comparatively speaking. This next page here is the budget to actual for the general fund, and this has your original budget, your final budget, and also your actual amounts on here. So the final budget illustrates that we projected to have a deficit fund or to use fund balance of approximately 2.7 million this year. And we had a surplus of approximately $2.7 million this year. So some pretty significant change, but a very positive aspect for the general fund this year. And just the last page that I wanted to cover in the annual financial report is the statement of revenues, expenses, and changes in net position for the internal service fund. These operate much the same as your proprietary funds or your business type funds, in the sense that there's a charge for service and the related expense, and they're really meant to be self-sustaining. And so both for the workers' compensation and the health insurance internal service fund, they both had very strong years this year. For workers' compensation, the change in net position was approximately $86,000, whereas the health insurance fund had an increase in net position of approximately $233,000. All right. Does anyone have any questions on the annual financial report? Right. Hearing none, we'll look. Oh,
So
what was that?
While Dave's with us, I just want to make a couple of comments, and so that he can correct me if I comment wrong. So Dave has a counterpart, a colleague who he works with, but the name of Greg Patel, and Greg has been the lead or has done the NDC piece of the audit. And Beata and I had a telephone conversation with Greg. So the NDC Standing Committee is certainly well aware, but the NDC had a deficit of about $2 million in 2022. And then they had then that increased in 2023 by about $700-ish thousand. So, but in 2022, Beata and Jane Hansen, the finance manager for NDC, and myself and Carmen, Beata built it. We just advised. Beata built a model to do some forecasting for us for NDC, because obviously we knew when there was a significant loss in 2022 and coming into the end of that year, that wasn't sustainable. So was that an anomaly of a year, or was that what things were going to look like going forward? So we built over several months, Beata built and we advised and tweaked a model to look at running some forecasting for NDC. There were two things that were really contributing to the overages in 22 and 23. One of them was the hot labor market. And so there were significant use of agency or leased staff and to fill positions. And the second was that there were still some not great reimbursement rates from Medicaid. Over that time between 2022 and 2024, Medicaid has increased their rates somewhat dramatically, and at least our labor situation has stabilized. In fact, it's actually improving, as of this morning reported at the Neighbors of Dunn County Committee meeting. So the end result was our forecasting model, or the model that Beata built, indicates that NDC will end up this year with a positive balance by about $400,000-ish before depreciation. So depreciation isn't a cash expense. So anyway, so they're look like they're solidly in good shape. And you say, well, what are those numbers worth? What we know is when we look at our forecasting model for 2023 and run it against the audit numbers, we were off by about $100,000. So it's projecting accurately. It continues to project a surplus in the years forward. And Greg from Kerber Rose concurred that we could leave that amount owed sit and pay it back over the next 2 to 3 years without having to move money in order to do that, assuming that all things sort of continue as they are, staffing continues to stabilize or doesn't destabilize, and our Medicaid rates don't have a decrease, which would be unlikely. We should be able to, the NDC should be able to pay that money back or recoup that money over the next, like I say, we say 2 years, but I'll say 3 just in case. So I wanted to clarify that piece. And then the other thing that I wanted to clarify is we also realized in looking over these financial documents that we budgeted some money in 2023 to the highway department that we didn't actually give to them. So part of it, a little bit was levy. Some of it was some shared revenue, some sales tax, some of that money. We budgeted it, but we didn't actually move it. So we still need to make an adjustment, and Beata's been working with Dave as to how to do that. We will actually move that money in 2024, but as a result, we're going to be pretty conservative about any recommendations that we make regarding fund balance, because how all of that plays itself out, we'll sort of evaluate over the next few weeks. But it was fully budgeted. It was all good. We just didn't move it from one pot to another pot. And so we need to do that now. We need to gauge the impact of that before we start spending it in other places.
Yep.
So. Yeah,
both of those are correct statements. Just to comment on the neighbors, 4 of the 8 counties that we work with have nursing homes, and the past 3 years for all of those counties have been somewhat of a struggle. And, the main driver of that is staffing. So, when you can't hire staff internally, you're forced to go to contracted help, and that cost difference is astronomically higher, and really puts the nursing home in a tough position, because those Medicare rates have been historically very low. And I know they're coming up and they're making trends in the right direction, but it's just really tough when the labor pool is what it was. So it's not unusual to see these have a couple bad, or rougher years, and then things kind of smooth out and we generate some positive income and see some positive growth regarding that.
Any questions? Go ahead. Thank you.
Okay. All right. Well, lastly, the last thing I want to touch base on is the management communication letter. This is a communication letter that gets issued at the conclusion of all of our audits. For the most part, it is simply an overview of how the audit went and what we did as part of our audit. But embedded in this is our internal control report. We're not required to audit all of the county's internal controls, but we're required to take them into account while we're planning and performing our audit. And with that, anytime we identify a weakness, we're required to see if it meets the definition of a material weakness, a significant deficiency, or simply an other matter. And so this is our second year working with the county. All of these findings are consistent with what was presented last year. However, I will say that in a number of these, great strides have been taken to help eliminate some of these findings. It's just tough when you know the audit. We don't the counties, because of their size, most of the audits don't get issued until June, July, or August, and so you really have 6 months, 5 to 6 months to implement any changes. So I know talking, to the team out on site that there are changes in place and we're making positive strides. We just couldn't get there all in 1 year. So, I'd like to remind everybody, the ARC wasn't built in a day, so it takes a little bit of time to evaluate and change processes and making sure that our team members are on board. But our first finding that we considered to be a material weakness was material account adjustments. This is a pretty common finding amongst municipalities and school districts in the state of Wisconsin. Essentially, this is why you have an audit done, and that is to make sure that your financial statements are presented in accordance with GAAP. And to do that, we, as we audit through things, we need to make sure things are recorded in the correct period, the correct time frame, the correct accounts. And so we make sure that the county's in compliance. And some of those entries that we post because of that were material. So just due to the magnitude of some of the journal entries, we do have a material account adjustment. The next finding is the preparation of the federal and state awards. And I'll go through this one with the next one right away. It's the financial reporting finding. Again, these are very common findings. And so standards changed about 8 years ago that simply stated that you as management of the county are responsible for preparing the schedule of federal and state awards and also for the annual financial report that we just went through. And if you can't prepare it, you need to hire an external party to assist with that. Or contract with your auditor and simply receive this finding. So I would say 95 to 98% of all municipalities that we work with receive these findings. So this is just a reminder that we assisted with the preparation of the annual financial report. However, you're ultimately responsible for the fair presentation of it. The next finding is the lack of segregation of duties finding. And the county receives this finding simply due to there's a few select individuals who have the availability to essentially, post all of the transactions and perform various attributes within the accounting cycle. I know this is one of the findings that there has been great strides at working through, however, just didn't fully get implemented in 2023. The next item is internal controls over cash. Again, I know this is another area that the county's working on. We've had discussions regarding a centralized reconciliation process, or a standardized or centralized approval process or review of all bank accounts. It's very common for counties such as yourself to have multiple bank accounts and have bank accounts at various financial institutions. And so sometimes, maybe it's a department or an individual is essentially responsible for that. So just making sure that we're, establishing a process to make sure that all of our cash is properly reconciled and accounted for. And then lastly, this didn't rise to the level of an internal control finding. We just simply thought it was good to note and to bring to everyone's attention, and that is regarding credit card transactions. Credit cards in amongst themselves are simply more inherently a higher risk transaction, simply because it doesn't follow the standard AP process that the county has. So anybody can, not anybody, but it's easier to get a credit card and go out and make purchases with that. So we do quite a bit of testing in regards to credit card transactions, and one of those tests that we're performing is to make sure that the expenditure has a valid county purpose. And so the only way to really do that is look at support for the transactions. And so we noted several transactions where there were missing receipts. No indication of fraud, theft, anything like that. They seemed, judging by the nature of the transaction, that they were allowable and proper county expenses. Just, we feel it's important to retain that documentation and review that documentation so that we can always support that these have the intended use of the transaction. And with that, that is all that I have to present today.
Supervisor Bauer.
Yeah, thank you, Mr. Chairman. A question for Chris, if you or whoever, when we use credit cards, are we paying a percent on, like 4% every time you use it, like a normal person does, or is it? So if you use credit cards a lot, you know what I'm saying? You're paying 4% every time you use a credit card. Are we, county paying that too?
We pay a processing fee.
Yeah.
We pay someone that processes them on our behalf, yes.
So you know what that costs, as opposed to
Well-
having our treasurer just send out over the email or, send out payment?
Well, okay, so two things. When someone pays us, we pay a processing fee. So, am I speaking correctly? Yeah.
Yes.
Well, no,
Yep.
I mean, there's a processing fee involved. The consumer absorbs the cost. So if I'm going to purchase, Andrew here? He's going to laugh because we were just talking about him not knowing this. But if I went to purchase my marriage license online for $50, I would pay an extra fee for that privilege of paying the county money. When the county uses its credit card, it's just like you and I or anyone else using our own private credit card. There's a processing fee that's built into that on the bank side. That comes with the cost of carrying a card.
Yeah. Yep. No, that's correct, Chris, how you stated it. And I know, sometimes when this comes up, we get the comments, well, we're not going to use credit cards. And I mean, in today's times, that would be very, very difficult because, sometimes the employees need to, take a county vehicle and they've got to put gas in. So we use a county credit card, or just for sake of ease, we're performing a service. We need various supplies, things like that very quickly. So we use a credit card. So credit cards themselves are they're not costly by any means. And oftentimes, as Chris mentioned, that processing fee is recuperated into, the charge that you're charging. It's just important to make sure that we have controls over the transactions.
The other thing about our particular credit cards through our bank is that we also accrue point value for all of the purchases. So there's actually a rebate or, a cash earned back on our credit card transactions. So
Yeah.
the bank would actually be paying the transaction fee to Visa or MasterCard or whoever for the privilege of using their card. And then, as Dave said, that's often built in the transaction costs of all of the things that you buy. So we go out and buy $50 worth of gas. Some portion of that is already the transaction fee that's working its way through that process.
Thank you.
Okay, anything? Yeah, Michelle.
So just kind of a back and forth between the segregation of duties and the credit cards. The lack of segregation of duties acknowledges that the county board reviews invoices and receipts, which we'll be doing later today. But we don't do that for credit cards. So is there somebody that does review all the credit card transactions, or is that something if there's limitations to the segregation of duties, should we be reviewing those credit card transactions as a board too?
I don't think it's necessary at a board level because essentially you're authorizing the payment to the credit card company. When that's being made, it really just comes down to establishing processes, within finance, and it doesn't specifically need to be all of finance. If highway has a number of cards, then, the highway manager or somebody like that should be making sure that employees are turning in receipts. And let's be honest, we're all human. We all lose receipts. I mean, I do it frequently for work too, and have done it. But we want to see that be the exception, not the norm. And if that does happen, then we should have an acknowledgement that, let's just, for example, say Beata uses a credit card, loses the receipt on the credit card statement. Something as simple of, she explained it to Chris. Chris just initialed that the receipt was lost, but that expense was approved. So the risk is that, somebody uses a credit card for personal use. And when you're a large organization, it's really tough to, look in detail at every single transaction that hits in a month or on an annual basis. So it's really just to make sure that we have a process in place. And I believe there is a process in place. It was just, we noted these receipts. And so sometimes, as simple as in department head meetings, emphasizing the need to make sure that we're being diligent and retaining these receipts and making sure people are diligently reviewing for the receipts.
And Beata has been working for about the last year on actually a updated, we call them P card, a purchase card policy to roll out to everyone that kind of articulates all of the rules and expectations around the having and using a county issued credit card.
Yeah, if you would, please.
Anything additional?
I'm just going to speak to the P card. We've, as Chris has alluded, we've put some time into a drafting one. We're at that stage where we're ready to actually implement it as we were waiting for the policy to be adapted on the policies. And I think that's already done. So our next step would be to actually go ahead and implement that operational procedures is what we're calling them, right, Chris? Yep. Thank you.
Anything that you have to add from Gerber Rose as far as any additional changes that come to mind, or you feel everything is in the report?
Everything's in the report. I just would, I guess I will emphasize, I know we've had discussions about the ERP system and the accounting process. And so, I just would really stress to put all resources available to really, pick an ERP system and get that ball rolling as soon as possible. So I know both on our end and the county's end, it's just not very user friendly. And there's a lot better systems out there that can give the county better data on a real-time basis from, that fund level and knowing exactly where you're at from a fund balance perspective. And I know there's been substantial strides in that process already, but that would just be my emphasis to you.
Well, thank you, David. Any other questions for Gerber Rose or for Dave himself? All right. Well, thanks for the report.
All right. Thank you much.
Good job.
Thank you.
It looked like a whole lot of pages. You made it quite simple. Thank you.
Yes. Have a great day. All right. Bye-bye.
Bye-bye. Turn it off, not back on. I'm sorry. Okay, staff reports. Again, we all received our monthly reports from the department's administration, Human Resources, CJCC, Treasurer, IT Department, Corp Counsel, and County Clerk, along with, I guess the first stab, I'm gonna say, at their budgets for next year. Any questions you have about their budgets or anything else? Michelle?
Got a question for our treasurer.
That's what I'm asking. Are you into this?
You will actually get to the actual 2025 proposed budgets a little farther down the
Yeah,
way.
they'll find out. Right, yeah. No, yeah, doing the report of what's going on right now. Yeah.
In your report, you mentioned the clearing accounts and timeliness and how simple process changes could save time and money. Do you have kind of a plan of what you might do or what you hope to do? Or are you working on developing that?
Well, since I've only been really working on that for about the last month, I
Mhm.
basically have been reviewing the departments that seem to be consistently a little bit behind in a timeline, and then assuming they're all having as many difficulties with SAP as I possibly am, because there is a lot of new staff in the county. I've been actually putting the procedures on what I think they need to do to accomplish finishing out the clearing of accounts.
Thank you. And I just wanted to thank you for, you mentioned you writing up instructions to help others for something else. So thank you for diving right into that and getting things changing.
Well, it's helping me also.
Anything else for Lynn as we got her here? Thank you. All right. Other supervisors have any other?
I would just note,
Please,
Lynn
questions.
survived her first tax collection, reconciled her receipts, and she stayed here, so we're good.
All right, Supervisor Bauer.
Yeah, I just had, going through Genevieve, I know we bypassed it there a little bit, but you still having trouble recruiting? I mean, it seems like you're getting your days down, you're getting them run faster than you were before. I know you like to give a long speech, so I'll just just make a quick question of that. You got a nice report here, I just didn't,
Okay, so I'll answer your question and then I just wanted to introduce our new HR advisor. So we have been seeing some improvement in recruiting efforts. Our applicant pools for a lot of our professional level position have been really good. And with the addition of Anastasia Stuber on our team, I believe she is online. She has made a lot of advances in the recruitment process in general and gained a lot of efficiency there. And so the time from vacancy to filling has been streamlined, and we are still working on kind of cleaning up those processes as much as we can. The other thing to note too is there is a small piece of that average that does include positions that are continuously posted. So sometimes that can kind of like sway the average a little bit, but I just wanted to point that out. I hope that answers your question.
yeah, good, thank you.
Yeah.
Anything else for Jenna? Jenna, you're.
Sure. Yeah, thank you. And I have to give Sadie credit because I was on my way down and just kind of sprung it on her like, "Hey, do you want to come meet the committee?" And so here she is. She's in for anything. So I just want to kind of let her introduce herself and give a little background and just give you the opportunity to meet her.
Hi, everyone. So my name is Sadie Bigd, and I've been in the HR advisor role here at Dunn County since the beginning of June. Prior to coming here, I worked for Dunn County's EAP provider, Real Living, Was there for a long, long, long time. Really loved doing what I did there and really am looking forward to all the really great things that I get to do here. Already, I've experienced a lot of new learning, I've gained new skills, and I love the relationship piece that I get to grow and cultivate with employees. So one of the main things that I've been doing since I've started is leave management. And so anyone who needs to go on leave for any reason, I get to connect with them and provide support and resources in ways that are going to be in their best interest. Is there anything else I'm missing, Jenna?
No, just wanted to
Okay.
give it.
Before you leave, let's introduce ourselves to Sadie. Bob?
Yeah, I'm Supervisor Bauer, District 27.
Supervisor Michelle Bashan, District 11.
Supervisor Vaughn Hedlund, District 3, Boyceville.
Supervisor Sheila Story, District 18 in town here.
Supervisor Ann Vogel in District 16 in Menominee.
Thank you. Nice meeting you all.
Thank you. And yes, welcome and good luck in our, hope it continues to go well. All right. Anything else for any of the department? Yeah, please, Ann.
I just have a curiosity question about the Criminal Justice Collaborating Council. Sarah's here, right?
Yeah. All right.
Yeah. So I'm always intrigued by your reports and all the great research and all the programs and grants. And so are there, I don't know, benchmarks that go along, with these grants and programs so that you know that they're working or the research based?
Absolutely. Every funder requires certain benchmarks, goals, objectives, activities, and we have to report on those quarterly to show that we're making progress. A lot of times we have measures that can tell us how we're doing, people in, people out. But sometimes the longer term impacts take longer time to study. So certain grants do, like our TAD grant, our state TAD grant, they do a 5-year state study of all the sites. So a new study is going to be coming out in the spring of 2025. So that will be another measure of that particular grant. But yes, all of the grants require that we meet certain objectives, certain requirements, and that we have the deliverables in order to be in good standing with the funds. So yes.
Yeah. So if you ever want to include that, I'd be interested, but I don't know.
Okay,
Yeah.
very good. And
Maybe I
certainly
just
we
like
can.
data, or you could.
Yes, and we can invite you to our full CJCC council meetings where we do go into more depth about the activities and goals and all the ins and outs of all those different programs and grant funding. Yeah.
Yeah, that sounds great. Well, thank you.
Well, I appreciate your interest and enthusiasm.
All right. Thank you, Sarah. Appreciate it. Okay. Anyone else? Any of the other? Chris, or have anything more? All right. We have anything for Chris? You were busy, but your report was much shorter. I had to. All right. Thank you much. Okay. Any of the department heads have news that they wish to present at this time? Okay. Consideration actions to be taken by the committee, review the vouchers. Again, numerous pages and lots to review. I have a couple, if I may start, if that's all right with the rest of the committee. Okay. Going back to grants, grants 1110. There's a series of grants there passed out to various internet providers. Is that program done now?
So those are ARPA funds that are distributed as part of the broadband projects that had been awarded over the last couple of years. There is still one outstanding provider of the project over in the town of New Haven and Tiffany, with Next Gen broadband that we haven't been invoiced yet for.
Okay.
But then all of the ARPA funds that had been awarded and set aside for broadband projects will be paid.
That'll be it.
Yep.
Okay. Any other questions for IT? Michelle?
It's not specifically IT, but you might know. Under patrol, there's a maintenance contract for 7,900 to Motorola. That's not our typical phone. So-
That's not your typical phone.
Right.
It's not necessarily radios. The body worn cameras that the deputies wear and the dash cameras are all Motorola products.
Thank you.
And the server that stores it.
Anything else for IT, as long as we got? Oh. Thanks. Appreciate it. Okay, and this one, I guess I'm just gonna say we'll pass on to the sheriff and we can hear about later. 328518 Ben Bernard vehicle repair, hit another deer or? Anyone know? I would assume that's body work. Being, okay, all right, and we can just, hear about it later. And then, I guess a question for Jenna, 1910 Med RX. At this time, I see it was about 496,000. How many people are really receiving, signed up and receiving prescriptions? Any idea? I suppose in the family plan, that's a little tough.
This might help or hurt me, but we actually just had a meeting with our benefits consultants and we're looking at census numbers. Our overall number of, and they say belly buttons in the insurance world, is over 900.
Oh, okay.
Our employee count is a little over 300. So the majority of our members are dependents and
Sure.
spouses. Does that answer your question? I would say
Yeah.
too that our
No,
claims
that's good, because
are higher for that.
now I don't know if the 496, is that kind of monthly or I know some things change, but
Mhm.
now we have 90-day prescriptions and, I mean, you could fall into a heavier month and do the rest, but is
Mhm.
that,
So that entire payment is both claims for procedures and visits and all of that, as well as prescriptions. So
well,
that ebbs and
okay.
flows depending on the needs of the members on the plan. I will say that that is a significantly higher number than we normally see, but we are watching that closely with our consultants, and there's no
Okay.
cause for concern.
Yeah, okay. Because I took a look at it, I thought that's over, when you talked about the 300, that was a number I had in my head, and I thought there's gotta be more than that. Because that came out to about $1,650 a person for the, this billing cycle, and I thought, I better just get it, but that's fine. So it's more like 900. And then, like you say, it also includes, if I went to the doctor and they made a prescription, it would be that whole bill. Okay.
Yeah, so actually that claims and RX line is only, visits, services, prescriptions. We pay like our third-party administrator fees, that comes through in a different line item, and it
Okay.
might take me a bit to scroll, so if I could show you that one. That one's a little less variable. It varies depending on our census numbers month to month, of course, but that is separated out from claims and RX in the reporting.
Okay. Okay. Anyone else?
Yeah.
Anything for Yes. Yeah.
Not for Jenna, sorry.
Oh, okay. Thank you, Jenna. Go ahead, Ann.
I don't know if I just noticed under 1270 patrol, 2 invoices to the Village of Elk Mound. So do we contract with other police departments? Uh, Oh, okay.
Yeah, I don't know. We'll have to check.
Okay, thanks.
Anything else? Mr. Bauer?
I have one on 1410 on the grandstand. Seems like do we pay the park committee that, or is that, says the ground 1410? See, where was I? Administration, fair administration, 27.5 and then 2,400, so that's about 32,000.
That's probably for the.
We're
fair.
pulling International Corporation. Are they the ones that put it on and then we pay them back? How does that work? I just don't know what that's,
I'm guessing it's for the fairs.
I'm sure
Yeah,
it's
they
for the
probably
fair, but,
yeah. and
are we paying them that kind of money? Is that what we're doing?
Probably.
Probably for entertainment, yeah.
Seems like a
I'll
lot.
check and see.
Yeah. Thank you.
Anything else? If not, if we're done with questions, motion to approve. Pending answers, and I'm sure we'll get those.
I'll move to approve.
Okay. All right, motion by Ann, seconded by Michelle. All in favor? Aye. Any opposed? Okay, move forward. Consideration reports, resolutions, ordinances, the county board from the Committee on Administration. Approval of the 2025 budget submissions. And then again, there you see the list, I guess, like I say, of this round of budgets from our reporting departments. You start out with A, that is the county manager and finance.
And I might invite Beata to come up and speak to that one.
Okay.
I'll bring it up on the screen as well.
Michelle?
Can I just ask a general question? I know in past years, there's been a little bit more information provided. And this year we just have the spreadsheet. I know I personally previously liked seeing like the org chart, thinking that would be helpful to help answer questions if citizens call, of who we're staffing to be able to explain a little bit of the budget. Is that something we could still get?
Certainly. Yeah, we can do our charts. We can do them for the budget workshop.
Okay.
Okay, I'm sorry. I'm trying to multitask.
So your question. On the finance.
Okay.
Questions for Beata or Chris? Right ahead, Bob.
On this too, but I had a question on the ERP.
Yes,
Seems
sir.
like there was no income or revenue at all, but seems like that's where your main costs come from. I think if I did my numbers right on here. That was over 400,000 something, I think, if I remember right, but maybe explain what that
So,
cost is.
so that cost is, we have $500,000 budgeted for the purchase of the system, ERP. In addition to that, we also have budgeted for staff. So we have existing staff that is working in the ERP project. Very few resulted in wage change. So what you see for the wage budget side, it's really the difference what they would have gotten paid had there not been ERP versus now that we're working on the ERP. So that is just a difference. In addition to that, there were a few temporary staff assigned to assist with this project as well. So that is why you see that 500,000, which is in the operating expense. And then there is some wage cost. Now, what I did in the budget for the wage, what you're looking at is for finance staff only. So in each department who is impacted by the ERP wage difference is actually part of their budget. So as their standing committees are reviewing those, then they know exactly how much of those wages were then pushed into the ERP project. So that,
I'm sorry.
no, go
I was
ahead.
trying to interrupt you. So the $500,000 set aside is towards the purchase of the ERP. The planned funding for that would be ARPA interest. So we've been collecting interest on our ARPA funding since the funding was released. And that has grown to about $700,000.
Right.
And so our recommendation to the board is going to be to utilize the interest, which didn't have to be spent by the end of or committed by the end of this year, which we could carry forward or whatever, to purchase our new ERP, our new SAP ERP system. But the reason it's not reflected as a revenue is because we don't get to make those choices. So that would be the recommendation.
Yeah, it just seemed like it's quite a jump from 50,000 to 500,000. It was just.
Oh. Yeah, no, this is the actual purchase of the system.
And either one of you, so we're anticipating the actual purchase of the product?
Yeah.
Of the software to be in that range,
Yeah.
Okay.
Hopefully less, but set aside some monies.
I was just thinking of the immense cost of SAP.
Yes,
That'll never go away.
let's not think about that.
So with that same cost, if the board approves that, then your 493,000 would drop down to, I mean, you're asking right now for 493,505.
So what's reflected there, part of that is what we would be asking for the ERP. So that is correct. The other, it's really tiny.
Oh, I can.
Sorry. Yep. So the ask for the ERP funding was for 500,000. No, I think. Sorry. Sure. Brought my laptop with, but you're good. So what's also impacted here is even though the ask for the ERP project has its own separate line, we were able to also preliminary account for additional fundings we might get, such as increase in the sales tax, one, slight increase in the levy, that would be second. And third would be a slight increase in our shared revenue. So based on our projections, we had additional funds that we applied, and I applied them using a methodology so that will be equally separated. So I applied that to kind of reduce some of the levy ask. So that would offset that need. But as information becomes available as we get closer to our round two, this is a very fluid document. In our workshop, you'll see it again, and you might say, "Oh, what's the difference in here versus what you might see in the workshop?" Because we've updated information that became available. And one of them is we're still trying to finalize the methodology that we would use for the wage variance or variable that we might have. And I don't want to confuse you too much, but we always budget for X of dollars to cover all wages, including vacancy. But we know that at any given time, we don't always spend 100% of that. So because staff turns over and benefits is another expense cost. So when we do our enrollment, they might change from single to family or vice versa. So there's always going to be that we spent less than what we actually budget. So this is where my colleagues and I are working on methodology and how we're going to apply that towards the budget. So probably more information than you needed.
Not really, because it was kind of understanding a little bit more when you explain it, because I know you can't change your benefits and wages and stuff.
Right. So as information becomes available, we'll continue on having, have to make changes up until we get to the final stage.
I appreciate it. yeah.
And the short answer to your question about, or a piece of the answer to your question about the $500,000 is that would be a one-time expense. Next year, that should drop back off. There is an ongoing licensing cost for those services, but that's captured elsewhere.
So basically, we hope, or it looks like we would be covered. The projected 493, we have good reasonable thoughts as to where
Yes.
we can cover that increase.
From finance budget or at admin, when including Chris Corpla, we don't have any significant increase in our regular operations. So we looked at line by line, and based on the wages with the step increase and cost of living increase that's built in there. But again, no decisions are made. We're waiting on those county board to make that decision. But that's what's built in here, right?
Everything's
As
covered
a,
at
as
this.
a proposed budget,
Okay.
correct. So if everything were to stay as is for finance, would be just that cost to cover the E ERP.
To continue a little bit on it, so let's say that the board says, no, we need the money here more. Is there a backup plan somewhere along the line, or I just want to kind of get a feel for this, we're going to take that interest money, we need it over here more. So what happens if you don't get it? Is that, don't go there, right?
Then, well, so we either have to fund the purchase of an ERP or not. So where that money comes from, there isn't an alternate, there's not another funding source. I mean, not automatic funding source. All of it would be something, unless we chose to do like short-term borrowing for that, or include it in a borrowing package, that would be potentially an option. But the board could decide not to purchase an ERP and use that money elsewhere. That would be an option. As you listen to our auditor, I certainly wouldn't advise that. But it is a choice and decision that the board could make. And then again, that gap, that $493,000 gap is part of the decision of how the board will decide to fill that gap through a combination of various funding options.
There are other, Dan is here to maybe provide information. I want to put him in a spot, don't want to. But eventually, the system that we have will sunset. So it's, if the board decides not to do it this year, the time will come eventually where we're going to have to do something with the existing system we have. Right, Dan? Right. So as the boards are thinking about the alternatives, we just wanted it to. Correct.
The one last piece that I would just add, Michelle, is in kind of addition to your comment about the org chart. At the budget workshop, we'll actually have a booklet that will have department by department kind of description of services, et cetera, and then costs.
Good.
I'm really looking forward to the workshop. There's a lot of exciting activities. My colleagues here took out additional steps to make it more interactive. So I'm really excited and looking forward to it.
Okay. Question.
Talking about the financial reporting fund center, it does look like the IT costs all went down quite a bit. Is that things that were reallocated elsewhere or less people less computer needs.
So we will get to IT in
Okay.
a bit.
Okay.
Beata was just doing the county manager and the finance
part.
department, finance division.
So any questions for me on that section?
We're good.
Okay.
Thank you.
You're very
Thank you for
welcome.
explanations.
Thank you.
All right. Our second department on our list is Criminal Justice Collaboration Division. Sarah Benedict,
We want to approve these as we go, or do you want to just approve them all at the end? I guess I'm just curious.
we can do if you have a preference. Anyone? I think we can do them all together unless, is that all right? Sure. Right. In our case, we have. Sarah, go ahead.
All right. Well, this I would have to say is already changed. This being round one, and a lot of our funding that comes through the Criminal Justice Collaboration Division is grant funded. So we've already have some changes overall. But I would just start by saying, basically, we have no significant operational changes overall. So really maintaining. However, we do have a change with our TAD grant in that the state is requesting that counties have more of the operational costs come out of the county match, which is required. And then the grant wants to pay more of the wages and benefits. So in our 2025 round one draft budget, we do have the cost shift for two of our employees where the levy portion is a lesser amount. And that same amount of dollars is really shifted to operational costs. So it's a neutral change overall, but it does appear that the personnel costs went down and then the operational costs went up, but that is for really the same amount of money. Michelle, I appreciate your comment about having some information about the different departments and divisions because there's a lot of different things going on and that can change year to year. So I just wanted to give a little brief recap. We are a small division of administration. We have 5 staff and then an additional 2 staff that are grant funded. Of that 5 staff, 3 and a quarter would be levy funded. The rest would be grant funded. We oversee 6 programs and 5 grants, and most of these programs are collaborative. So we just don't work with ourselves in our little division. We're working with the sheriff's office, work with the district attorneys, we're working with the human services and other partners out there. So the grants, they're kind of listed by number, so it can be hard to kind of follow and see what things are for. But we do have our treatment opportunity grant. We have the medication assisted treatment grant. We have a jail residential a treatment grant. We are requesting use of the the county opioid settlement funds for the upcoming treatment and jail grant. This is a new grant and it does require us to have a 25% match. And it really fits well under our local opioid settlement dollars. So those numbers aren't necessarily as up to date, but we're anticipating about $33,000 request in that local opioid settlement dollars. And that really would go to be that match portion for our staff that is operating the jail-based treatment program and medication-assisted treatment program. And then we have other funds. One grant that has changed, that RSAT grant, we expected about $100,000. We're getting $61,000. So it's a lesser amount than we expected. A separate grant, our law enforcement deflection grant, that is expected to be at about 140,000, which is accurate here. And then we have another grant that is just for medication for the jail year 3 on there as well. So these were best estimates as of the time that the round 1 was due. So we're going to continue to refine these. Some grants are coming in and we know the actual amounts. But overall, we're really looking for just that cost neutral with that opioid settlement ask, which would be less than 33,000. So I'd be happy to answer any questions that you might have looking at the budget detail.
Anyone? Chris, you had a comment for us?
Oh, no, sorry.
Oh, okay, that's all right. Ann,
Not sure if I'm missing all those the grant detail.
This would be on page 4 and 5 of the 110 area.
Yeah.
It's in there because I printed this out from the packet.
Oh,
So if you
okay.
scroll down, that's page 1. Oh,
We didn't get none of that information.
so interesting.
Yeah.
Yeah, because I was curious because we see levy and then,
Oh, so you're just seeing this.
Mm.
I thought I printed out the same thing.
You might have printed it, so you also have a link that gets you to all the budget documents, and it would be in there.
and that one that came from
Yeah.
Beata,
Yes.
Okay.
Yes.
All right.
These
So
are
may I
just the
ask you-
summaries.
Less the changes.
and so we're just focusing on the levy portion of the budgets? Is that what we're approving?
Well, yes and no. Obviously, the whole thing is all yours to mull over, and you could say, we want to give Sarah $1 million more to do criminal justice work in Dunn County. And then she would be jumping for joy. No, but you obviously you get to say anything about any of it, but the biggest piece of the decision making, I guess the easiest and the hardest piece of the decision making is really around the levy ask.
Okay.
And in Sarah's case, there isn't one.
Oh, it's just taxes, general property? Wouldn't that be the levy? Oh, that's.
No additional, I'm sorry, no
Okay.
additional levy.
No
Okay.
additional.
No additional levy.
And
That's
so
correct.
everyone's gonna have this vacant salary and fringe variable. That's like a,
They are. It's a, okay, so we've spoken to this in years past, but we track on a annual basis how much money that we allocate to salary and fringe and then how much we actually expend. We call that our vacancy rate or our wage variable, or vacancy rate kind of. It's not truly a vacancy rate, but that's a good enough description or definition for what it is. So for instance, in this coming year, we'll spend we have budgeted about $50 million of salary and fringe across the county, and we anticipate that we probably could spend upwards of 7 to 10% less than that. And so what we've done is take a conservative number of that of around right around 3%, 3.19%, I think, or something. And then we basically, it's like I don't want to say it's an unrealized revenue. We're going to budget it, but you're never going to expend it because so it helps us to balance our budget to know that we won't expend that money. And we can go back at least a decade and look at the numbers and know that we've not, that our number is not a risky number.
Any other questions for Sarah? Good report. No levy increase, thank you. So far. All right. Next, human resources. Jenna gonna come up and make herself available for questions.
Okay, so in general, my request for 2025 does not include any increases to operating expenses. You will see that there is a difference of $68,361 from last year, or from this year to next year. And that includes the additional costs for employee wages and benefits, but then also largely in part due to the addition of one FTE in our payroll division, which was added as part of the ERP project. Our really every single member of our staff in HR and payroll are involved in this project very heavily. And so in order to make sure that we could keep paying people on a biweekly basis and on time, with all of those hours being allocated to the ERP project, we had someone join on the payroll team. And that basically covers the difference. I'm not asking for anything else out of the ordinary, but I'm happy to answer any questions that you might have relating to any of the operating expenses or otherwise.
And I would say two things about Jenna's comments about ERP. One was in 2024, we did a carry forward of 2023 to cover those personnel costs related to what we call the backfill to existing positions. We did bring on 3.5 positions. 3.5 positions, but all of those people are aware that their positions are not. At the end of the project, we will evaluate whether or not they would remain, or they are all aware of the temporary-ish nature of their positions, because this is a project that was anticipated to be 18 to 24 months long. So now you see some of that payroll cost come forward in the, as Beata indicated, in each of the individual sections in which there happen to be some of those backfilled positions. I believe it's in HR, finance, DHS, public health, and the treasurer.
Mm-hmm. And if I could add, so if we kind of tallied up the number of employees that are involved in this project and the amount of hours that we expect them to spend on it, I think we landed on about like a total of 13 FTEs, right? So like the equivalent of 13 full-time employees. That's our existing staff that are working on this project. And so we added 3.5 in comparison to that expected 13 FTE that are expected as far as the time commitment. So we do feel that it's a lean approach as much as we can to getting the project done well.
Anything else for? It's not here. Thank you. Appreciate it. All right. IT technology.
All right. The IT department. So we're kind of making some changes in our budget. It may be a little bit hard to follow, but it is related to some reclassifications that you approved to the whole board recently, and just some changes. So what we're doing is we're eliminating one of our cost centers. So you'll see that one area that is previously had values and is now blank. So ultimately it got to be, we had two kind of different units that were there, and it was not worth our time to manage that in two different cost centers where they could easily have been in one cost center. So it'll really put all of our kind of IT costs in one cost center. So So that's where you'll see some of those changes. So if you do kind of go through what used to be that that IT business relations cost center is the one that's gone blank, most of those expenses have moved into IT operations. So if you really want to kind of look at those differences, you can do the math, or you can take my word for it. That's what we're doing. The only real difference in there, as you talk about, like, so obviously there's some salaries and wages that were in business relations before. All of them moved into IT operations with the exception of Krista, who is not in there. She is under the top cost center that just says information technology. So you'll see increases in, you should, I'm gonna scroll up a little bit higher. There we go. So you'll see the increases in the salary and wages in that, in kind of that first cost center as well there. And so that just reflects moving Krista, whereas Matt, Randy, and Joe, if you say it like everybody knows who they are, but 3 of our other employees moved from one cost center to the other. So that's really kind of some of the shuffling that you see in there. Fundamentally, when you add everything up, it's not it's just moving people into different cost centers. So the only real structural changes that you see in that, or the overall changes that you see in that, are related to salary and fringe increases of those employees, which actually resulted in a lesser salary and fringe because we had a retirement and we had people kind of come through. So we're a little bit lower in that regard. Then the only other, I guess, part to really call out the one of our main items in IT is in the IT operations, there is a maintenance and contracts line. It is about 148,000. That is pretty much where we buy all of the stuff, all of the software, all of the different pieces that run operations within IT. So that's our one account where we buy or pay our software licensing to be able to do things. So those costs have gone up. It's inflation. Our costs are going up. Some of our vendors are really nice to tell us that, hey, we're going to increase our prices by 7% this year, so budget for it. So that's really what we're seeing there. So we do our best in order to be able to figure out how we can bring them down as much as we can, but for the most part, your options are stop using that software or go somewhere else. And so we do in some cases, but those are the compromises. So, and then the other things, just to kind of call your attention, there is a couple of accounts here just to maybe help explain a little bit. The land modernization cost center. It's the one that ends in 25, if you're following the numbers. That just has 2 lines there. What that is retained fees from the Register of Deeds office, and those are monies that have statutory requirements and how they can be spent. So we kind of keep them separate. It's a fund. It does carry forward automatically from year to year to be able to spend that. So that's what that is. And then the very bottom cost center is our IT equipment replacement fund. So if you've been around for a while, we set aside money every year, a certain portion of a computer, so that when somebody's computer has lived its life, we have the money to be able to buy that. That's what that fund represents. In this particular year, we've kind of hit the first year where we're buying from the big purchases a few years ago. So I said this is the COVID replacement year. So all of those laptops that were purchased with COVID funds are kind of due. They've met the end of their life. And so we're going to be replacing them this year. So what you see reflected there is about $217,000 in expenses. And if you go up to the revenues side of that, can't scroll that far. Oh, I'm never going to find it. If you go up to the revenue side of that, we do, so every year departments put aside money, and so we use the money they put aside. In this particular year, we are spending more money than they put aside in a year, which is fine. That means that we're going into the money that we've set aside over the year. So that's what you're seeing there. And so we expect that for the next couple of years, and things should start balancing out. I think for the first few years of this fund, what we were doing was putting a lot of money into it and not necessarily pulling any out of it, but we're kind of getting to the part now where we're going to probably be maintaining a somewhat even account, but there's highs and lows, and we're going to be in a high right now. So supervisors, we're not replacing supervisor laptops next year. We're going to wait until the following year at the election to give everybody new laptops. So, so you're going to have to make those things run a little bit past their lifetime. So it's the basics.
And are we replacing some of the servers that we added to kind of make the change to work with Phoenix and not?
So we replaced those servers 2 years ago. And so we typically put about a 5-year life cycle on those. So to your question before about the ERP, so in 25, we'd be looking at year 4 of those servers, and then 26 would be year 5. So that's kind of the end of life of those. So if we don't replace that ERP, then we're going to be replacing the servers that are running SAP in addition to having to implement that. So that is kind of a future cost that we're looking at. But yeah, so we haven't done that. Most of the purchases that we make of equipment like that end up on the capital improvement plan, because I mean, those servers were $147,000.
I was going to ask. Thank you.
So as you look at some of those things, those are typically big costs. So what you're seeing here is just annual renewals and maintenance. Capital improvements are where the rest of those larger purchases happen.
That could be a 3-year loan or something because you're going to last 5 years or whatever we get there.
Yep.
Okay.
Yep. And we're trying to get some of those larger computer or server replacements and different things like that also put on that replacement schedule where we're setting aside money every year. But our annual budget would go up quite a bit right now if we were to do that. So we have like a 10-year capital improvement plan where in IT where we're looking at, all right, this is going to be due this time. And we try and balance that out to the point that, we're looking at $300,000 to $400,000 a year to just replace capital funds, and that's going to hit every year.
Yeah.
So,
well, I think that's the way to do it. I mean, I appreciate that approach much more, and if we have to, like you said, I'd rather see a $50,000 increase in that fund, knowing that, we're going to save paying 7% or 5% interest in fact, probably receiving 5% interest as it's on the years that we don't have to spend it.
Yes. The computer replacement fund does generate revenue because it's being invested, because we know when we're going to be able to expend that. So,
Question, Sheila.
Just one, you mentioned on the contractual things around the software, that aspect of it, you mentioned that it was due to inflation. But isn't inflation lower now than it was back then to where it shouldn't be impacted by inflation? Or are they gouging us?
Yeah, I mean, call it what you want. The prices are going up. And, I think some of that is, their salaries are going up, right? They have to pay their people. And so they're charging us more in order to be able to cover those costs.
So it isn't inflation necessarily, it's something else.
Yeah.
Okay.
It's costs are going up. So, yeah.
Thank you.
And I would say they're going up more than they had in the past. You used to kind of think around 3 to 4%, and we're seeing we had a contract as we're working on something with the treasurer to replace that, where they put it into the contract that said 6% or CPI, whichever is greater. And we said no to that, but that's really where they're going, and that's just them trying to protect themselves from what they had experienced over the last couple of years.
Well, there's really not any other place to shop for anything either. You're kind of bound to shop right there for those specific things.
I mean, it's like very similar to, as you talk about the ERP, right? The decision to move away from one of those softwares isn't like, oh, you sent me a high price, I'm going to cancel this, I'm going to do that. It's a process, it's sometimes year-long process to be able to migrate from one system to another. So it isn't that you can't do it, it just takes advanced planning. So yeah, when they hit you with a price, you pretty much have to pay it that year and then start planning on next year, we're going to go somewhere else. So.
What else? Thanks, Dan. Appreciate it. Okay, we're down to corporate counsel. Any?
Just briefly in summary, there is an increase in the budget for 2025. That is, I think, entirely related to a requirement that I'm retiring in January. So there's going to be a benefit payout, which is something not usually included in the budget. And then I did add, I think, sure I get the right amount. I did add $4,000 to the budget item for prosecution and legal expenses, and we use this for a number of things, including retention of outside counsel who have expertise in various areas. And we found I think 2 out of the last 3 years, we've been very close to hitting or actually exceeding the budgeted amount. And so I talked with Beata and and I guess I just felt it would be appropriate to request a slight increase there just to make sure that county's legal needs might be met, and then eliminate the need for a contingency fund request or budget amendment sometime during the year if something comes up.
Any questions, Supervisor? Mhm. All right. Anything else, Nick, you care to add? Otherwise,
No?
you're off the hook, I think.
Okay.
County clerk is ready to go.
The county clerk likes to count votes quickly and get things done quickly. So you will see that there are some variations in the numbers this year. My budget always fluctuates year by year based on the number of elections, right? So we're going to go from 4 elections this year to 2 elections next year. There is some fluctuation with that. There is, I will note, I did ask for a small increase in some additional educational funding for the staff. I have a new deputy, I have a new assistant deputy. And we typically like to send any of the county clerk's office staff to the Municipal Clerk Institute run by the University of Wisconsin Green Bay, because we serve as a liaison for municipal clerks when they have questions about how does this work, how does that work? So we like to make sure that the staff is fully aware of how to do those things so that they can assist the 30 municipal clerks and sometimes municipal treasurers with different questions. So there's a slight increase there for some training and conferences that they will need to attend, as well as some various program related increases. But they're quite, it looks like a big increase, but it's $750 in one line and $1,500 in another, and that's mostly just for educational training. So.
Michelle, go ahead.
So you were talking about bringing passports to your office?
Oh, yes.
Is that revenue
No.
accounted for?
We did not do this in the first round of budgets. We've been working with the Department of State to bring back passport offerings. For those of you who remember, the Clerical Courts Office offered passport renewals and applications, but stopped doing that in the fall of 2022. It's been a long process with the Department of State, but we're looking at trying to reinstate that by the end of hopefully September, maybe beginning of October of this year. Got pushed out a little bit. If that is the case, with the number of passports that are average of a county of our size, we should be bringing in an additional around $35,000 to $40,000 in revenue for the county clerk's office, which would help offset some of the additional costs of a new staff member that was added this past year. So, yes, so that's not reflected in this. If we get that squared away, and we can maybe do some budget projections with Piata on that as well. So I'm sure she's got a spreadsheet for that. Yes, good question.
All right. Anything else for the clerk? Good.
Okay.
Hope that works out.
Yeah.
Thank you. All right. County treasurer. You see, when you're new, how popular you become.
Is that what it's called? Popular? Well, let's see if I did obviously create this, so, with doing some 3-year projections to the past and then going forward to see, but the biggest change is in the interest rates. I kind of did a proration and then averaged it out, and I did bring it down a little bit just with some of the estimations. They're probably not going to keep trending up. We're going to probably level out and maybe go down. So, that was the biggest change in the revenues. For expenses, a lot of that has already been pre-filled based on prior engagements of the county board and or other departments, but our contractual and consulting services, which is the 529005 account number, that increased, and the majority of that increase was there was a folding machine purchased last year, so there's a cost that was broken down. I think it was 3 or 5 years, and then there's maintenance costs started this year, so those are going forward. So that's the majority of that difference there. In that account, we have our check sealer, our folding machine, and our copy machine maintenance costs fall into that category. And then just the cost of the operating supplies, we increased that by 1,000. With the check sealer, they did find in tax season last year that the quality of envelope needed to be upgraded a little bit. They didn't process through that very well. So we're working on getting that costed out for this next tax season. So that's really the majority of the changes out there. I guess I can comment on the illegal and uncollectible tax. That's usually a process that we find out that number in October, I believe. So that is just an estimation. I use that number because it was used last year, and I think it was for Phillips MedSize. There was something that we thought was going to happen, and it didn't happen yet, but we did get some questions on it this summer. So I'm assuming they're in the process of requesting some tax rebate. They can usually go back 3 years if they think they were taxed too high. And if that process goes through the state, then all the municipalities are required to pay back some portion of that. So that's our estimated amount. So any other questions?
Well, I think she answered it because I had flagged the question mark under the med size that you just mentioned.
Oh, yeah.
Because I wasn't sure what that was about, but I did want to familiarize myself again about uncollectible taxes and what your process is. I guess I'm not clear on that, on what you do when it is people haven't paid their taxes.
We send out delinquent notices and we continue to do that. They get notices through the REM process. You're talking about real estate taxes? Yeah. And then there's a 3-year that they become delinquent, that the and Nick probably can speak a little bit better on behalf of this, but when they reach the certain limit, we send out notices that they could be losing their home due to non-payment of their taxes. And there's a process that we use. Corp counsel, it goes through the court process. They have a lot of time to become good and get their property back. But some of those laws are just recently changing in that they can actually purchase their property back when we get to that. It's called in rem process. And I think I did have some notes on that in one of my previous monthly meetings as I'm learning about it a little bit more detail, but
So are statutes involved here? When you say, you know, after 3 years or whatever, is there?
Yes.
That's just our particular way of doing it.
Yes, when the taxes are due, what is it, July 31st is the deadline for second payment option. And then in September, I think September or early October,
yeah, September 1st usually.
September 1st?
Yep.
A tax certificate is perfected. And then after the tax certificate is 2 years old, so you don't, you'd have to, it's almost 3 years since you paid your taxes. Then under section 75.521 of the statutes, counties that have adopted an ordinance electing to use that procedure, Dunn County has, we've used it for years, more than 30 years, can file a foreclosure action on the properties. It strips all liens and secured interests and vests title in the county, in the real property.
But in the meantime, they're not just delinquent for that 1 year, they're delinquent for the next 2 years and the next 2
True.
years and the next years to where it becomes quite high.
It can in some cases. We do a pretty good job here. I mean, Lynn is relatively new, but we have a long employed a practice of really doing a lot of outreach, contacting people, writing them letters, trying to encourage. I mean, 30 years ago, it was more common for the foreclosure action to be done every 2 or 3 years, and we would have 150, properties on the list that gets filed with the court. The for the past certainly 10 years, that gets down to a manageable amount. I think we had 8 or 12 of them the last few times, or even less. It gets down to a real manageable amount because we try to work with people. I don't know what the realtors tell you, but it's a lot easier to get people to pay their taxes than it is to try to sell property. And so it takes less work to get people to pay their taxes, and then everybody wins because the taxes are paid. The county can use the funds accordance with the law, and people get to keep their property.
So it would be your opinion that there's no reason to look at changing the ordinance in any way it's worked.
Well, actually, I've been working on some amendments to it here during the meeting. There are some changes in state law that change how they give greater rights to former owners and heirs of former owners. Dunn County has always been in that area anyway, just I think because we could. Philosophically, I think the county recognizes that there's an important heritage, family tradition and so forth in connection with a lot of real property. And so we've always allowed former owners to repurchase. We've always allowed heirs of, I know I've been involved in a number of situations where heirs of someone who's deceased are allowed to repurchase the property that their mother or father or parents owned. And so, but now before it was optional. Didn't have to do that if you didn't want to. But now there are greater rights for property owners. Another change is that the proceeds from sales used to filter more towards the county's general fund. And now they have to be kept and they have to be returned to somebody. And we have to make an effort to try to find who they can be returned to. And then they're maintained as a unclaimed fund for whatever limit there is by the treasurer or the state treasurer. And then sometime in the future, then the funds may revert to the county. But we've had cases like that. We had a house here in town where the owner has passed away and the children are out east, grown. They paid the taxes for years and years, and then they just decided they didn't want to anymore. And, we didn't know, we couldn't get a hold of them. We didn't know how to find them. We just knew that the taxes were getting paid and then, an envelope was coming in with a check and taxes were getting paid. And then all of a sudden, several years later, there was delinquency and we took the property. So it's all work that we've done. It's just the statutes are a little more specific about what's required. And happily for us, the adjustment really isn't that big because we've been doing it.
Well, and it sounds to me like you said, there's like maybe 8 or 10 in the entire county.
Yeah, a lot of, by the time we get to file the list of properties that are going to be included for foreclosure consideration by the court is generally really small. Or comparatively small, I should say. It shrinks a lot because we meet with people, we talk with them, we let them know the consequences.
Well, and isn't the information published too?
Yes, yeah, that's always published in the newspaper, and then all of the property owners receive, and property owners and holders of secured interests and liens receive, I don't know if liens do, anything secured. They receive a written notice. They get the stack of papers that gets filed with the court that shows the property, the legal description, the amount of the principal amount of delinquent tax, and then their rights. We even send stuff to the United States, the IRS, the Farm Service Administration. There are a number of agencies that we send notices to depending on whether there's an interest there. But everybody gets notice.
And then when you do your report to the board, you would probably include the list as well, so we'd be able to see how many people are delinquent.
Yeah, and either I would, or I guess we had to decide whose responsibility that is. I'm not sure yet, but we do have the list currently listed in our office. Anybody can come and request to review that. And then I think those letters must have went out 3 weeks ago or so.
I think they did.
And they have a due date of October 31st. So people are calling our office right now saying, what's the minimum amount that we're required to pay to keep our property out of foreclosure? So, and we just give them that dollar amount, and if they're able to pay, they do. Otherwise, they have to attend the court hearing or go to the
The
next step.
education, I needed to remember how that was done.
And this is something that I think we've generally included in the, I think the treasurer has too, but I know the Corporation Council has included reports on number of properties that were included, number that were foreclosed on. So like I said, for us, it's going to be almost business as usual, just a little bit tightened up because of statutory requirements.
I have a kind of a question that she just kind of, Lynn just brought up in my mind here. They can pay a minimum amount to keep it for how many years? If they keep
Well,
paying a
so-
minimum for, yeah, I mean,
Yeah,
can
so
they
I
do that
guess I should
forever?
rephrase. So the
Yeah.
person that I talked to had their property, so we're foreclosing right now on the year 2019 tax year. So they have to pay at minimum that to keep them out of this foreclosure process that we're in the process of right now. So next year, if they don't pay any more than that, their 2020 tax bill will then go through that process again. And
So I can keep paying a minimum every year then.
some of them, yes, maybe do that. I think there's one person that's always on the list that just
There
only does
are a few
that.
people that do that. They're 3 years behind every year. And we can't foreclose on them until the tax certificate that comes into effect on September 1st, following the, the payments, either one payment or two payment. So that has to be 2 years old. Once it's 2 years old, then the property can be foreclosed. But if we do it right away when the tax certificate is 2 years old, so let's say it's 2024 now, so we could be doing 20, 21, I guess, or 20, I don't know, I can't remember what direction it goes. You pay last year's taxes this year.
Yeah.
So anything in between that first tax certificate, anything that's less than 2 years old, a tax certificates that's less than 2 years old, can't be included as part of the foreclosure proceeding. So people can pay the delinquent year, for example, so they can pay the year that has caused the property to be included in tax foreclosure. That automatically, by operation of law, will remove it from the foreclosure proceeding. And they may still have delinquent taxes, but they're not eligible for foreclosure yet.
And those properties that are delinquent are continuing to accrue interest on the unpaid.
Interest and
principal
penalty.
and penalty, yeah.
What rate?
The interest is 1.5% per
I think
month.
penalty is a 0.5%. And then if property owners file bankruptcy, then the penalty has to stop. That's viewed as a punitive thing and by the bankruptcy law, so it's not allowed.
Thank you.
You're welcome.
All right. Down here, 2024 administration budget adjustment.
Yeah, we got it.
Oh, wait, I'm sorry, we got to approve. Mr. Bauer, you were going to do that.
Yes, I'll approve the vouchers, or I guess the yeah, budget as written.
Okay.
Well, there'll be changes, I guess you can't do that, but.
Yeah, I guess I don't see the agenda. So the computer, what is it titled?
Core?
Yeah, the network core upgrade budget adjustment. What that is in the 2025 capital improvement plan, we had allocated ARPA funds for our network core replacement in 2025. If you remember correctly, the ARPA funds have to be committed in 2024. So what this budget adjustment is for, is to just go forward with the full purchase in 2024 as opposed to committing in 24 and buying in 25. So we're prepared to do that, and actually our vendors don't really like the idea of a commitment and then waiting in order to do that. They want to just get it out the door once they have that. So that's what that budget adjustment's for, is to essentially do what we were going to do in 25 and 24.
And CJCC has an adjustment for us, 103,654 state revenue grant.
That's correct. This is year 2 of our state opioid NNAI, non-narcotic, non-injectable medication. So this really provides the medication for medicated assisted treatment for opioid use disorder in the jail. It is state funding. When we received the grant last year, we didn't realize it was a 5-year grant. So this would be year 2. Year 3 is already in the round 1 budget that I provided earlier. But this would just be to really accept that $103,000 for this year, starting July 1st through June of 25.
And that can be used just for opioid patients or for anybody receiving treatment?
This is specific to opioid use disorder. Yes.
Any other questions? All right, so opioid only treatment, all right. Thank you. Appreciate it. Okay, item 9, closed session, the committee administration may convene. Oh, or I'm sorry, budget adjustments.
I move approval of the budget adjustments for the CJCC and for IT as reflected on the exhibit.
Okay. No, not the budget adjustment. Yeah, okay, motion to approve the budget adjustments by Sheila, second by Michelle, all in favor?
Aye.
Aye. Sorry, I'm in too much of a hurry here. But we're gonna get done. All right. 9 is a consideration of closed session. And then we obviously would have to have a motion and then a vote as to move, and it has to be unanimous.
Yes, we roll call.
Roll call vote, okay?
Make a motion to go into closed sessions according to state statute 1985.
Seconded by Michelle, motion by Mr. Bauer. All right, roll call.
Supervisor Bauer.
Yeah.
Supervisor Michelle.
Yes.
Supervisor Headland.
Yes.
Supervisor Story.
Yes.
Supervisor Vogel.
Yes.
Chris, who do you want to stay and who do we want to, is anyone that needs to? Okay,
Stop the recording.
okay. And stop recording at this point? Closed session. I'll second. All in favor? Aye.
Don't have to do roll call.
Doesn't have to be roll call, just 2/3.
Just, okay.
Roll call to get in. Don't have to roll call to get out. Okay. All right. We're back. Are we back recording? Okay. All right. This is again the Committee on Administration. We have returned back out of closed session. Our next item would be our next meeting date. And I don't have my 26th of September here at 3 o'clock. All right. Anything else we need to cover for the committee? Chris.
Just by way of teaser for the next meeting, that will be the meeting in which you'll take a look at benefits, the wage grid and the benefits for 2025 and make decisions about those.
Okay. All right. Heads up. Lots of little reading ahead of time again. A lot of reading ahead of time this time. All right. Seeing no other items on our agenda, declare the meeting adjourned. Thank you all for coming and your work and your good questions. Thank you to staff for doing a